Webinar on Wednesday morning at 10:15 Pacific time. We've got people from all over the country. So let me introduce myself. My name is Ryan Kalmbach, and I'm the owner, one of the owners here at the Johnstone Supply in California. We've got 6 stores throughout California. I just wanted to clarify who I am, because I know we have contractors and guests from across the country joining us this morning. And we're here to help answer your questions. Why would Johnstone Supply host a webinar like this? Is a question you may be asking or thinking to yourself. And at Johnstone Supply, it's our passion to partner with our employees and our customers to help you to grow. And I believe that we can help you to not just survive the times we're in, but to thrive and come out of this stronger than we went into it. That may sound crazy, but that's what I talk to our team about just about every day. So that's my belief. Our mission at Johnstone Supply is to make it easy for HVAC contractors to do business. And I think you would agree that times right now are confusing and not so easy. So one of the ways we're trying to make it easy for you is by providing you with the information you need and the answers you need. And today our focus is on the Paycheck Protection Program. I'm just going to do a shout out to my producer, Michael. Thank you for helping me out. Michael, I've been messaged. All our guest experts are on the line, so make sure you watch for that. And we're gonna get rolling. So my intention today is to do this agenda. We're gonna share something good. If you haven't thrown that into the chat bar, tell me something good. That's how we start our meetings at Johnstone Supply. Then I'm gonna do a super brief overview of the Paycheck Protection Program and leave most of the hour for questions and answers. We have 3 experts on the call with us today, and I'll introduce them here in a few minutes. And then at the end of the meeting, we have one way that we measure our meetings, and it's value for time on a scale of 1 to 10. So we're gonna ask you to rate the meeting at the end. Michael, have you queued up that opening poll? Can you throw that poll up really quick? We're looking for some feedback on what other topics are relevant to you today. So when you see that poll pop up, go ahead and answer those questions. I'm going to keep going. You guys go ahead and do your voting.
What are the topics
pick more than one. So here's our expert panel. We've got John Anderson, who's the CEO of Single Point Outsourcing. Single Point is one of our partners here at Johnstone Supply. It's our HR partner. And John and his team have been invaluable during this time, navigating all of the new HR laws and also navigating helping us with our Paycheck Protection Program application and the reporting we had to do for that. We've got AJ Anton Giovanni, who's the CEO of Mission Bank, which is based in Bakersfield. So AJ is a local boy for us, and I believe banking locally is a good thing. So that is good. We're very happy to have AJ on the line. And then we've also got Graham Kelly, from Live Oak Bank, which you may or may not have heard of Live Oak Bank before. Live Oak actually has a team dedicated to the HVAC industry specifically during normal times and including these times. So those are our expert panelists, and I'm really appreciative and thankful for all 3 of you gentlemen joining us this morning. I know the 3 of you are super busy normally, and now it's like double that with everything going on. So thank you. All right, so this is the tell me something good portion. I'm gonna look through the chat. If you haven't had a chance to tell me something good in the chat, throw it in. I know this is like a crazy thing to take up time to do possibly, but I believe really strongly in starting meetings this way, so we're gonna do it. By the way, that's my something good. That's a picture of my front lawn right now. And if you can't tell, those pinwheels are in the shape of a heart. So because of social distancing, one of my daughter, who's 12-year-old, one of her friends came by the other night, and I'm thankful that they planted these in our yard instead of TPing the house. But since they can't hang out, they did this. So that's my something good. Let's see. Monica says we still have work for our employees. That's something good. Let me go through the list here. Lauren says we are fortunate to still be working and keeping our employees working. Yes, absolutely. It's good to be an essential business. Rise says we'll be looking at this in the rearview mirror in no time. I agree. This too shall pass. Stephanie is happy to be healthy, working, and still able to service our customers. Joe says our plants are growing well, which is good. Michael says Vaughn's actually had toilet paper. Yep, it's a big win. Bob says Chase Bank called back yesterday. And man, I am technical difficulties. Oh, Bob, what did it say? After 1.5 weeks and our PPP loan is moving along. Yeah, that is good news. Dave says he's still here. Kaylin's done with payroll before 11 o'clock. Diana says we are alive and well. Alfredo is spending time with the family. John Anderson, one of our panelists, says seeing family and friends go on walks. Yes, I've had a lot of walks with my family in the last couple of weeks. Glad we are still working and busy, says Kevin. My family's healthy, says Katrina. Robert says this is the first slowdown he's had in 20 years. He's enjoying the part-time off. And Sarah says we were fortunate to still be working. Yeah, all right, man. A lot of similar things. Life in Santa Cruz is good, and we're still all healthy and trying to stay busy. And the last one I'm going to read, because you guys are rock stars and just blew up my chat. I love it. Dustin says, nearly finished with the to-dos. That's a good thing. All right. So moving on to this portion here. Hang on with me. Yeah, quick disclaimer. The information provided today by myself or any of our panelists is not legal advice. Just take it as informational purposes only. Contact your attorney to obtain any legal advice, or your bank or your accountant, depending on what specific advice you need. I think you all know by now that the landscape on all of this is still forming. The guidance is not 100% complete coming from the government on some of these questions. And so some of the answers I know are going to be best educated answers. Best educated, I'm not going to say guesses, but best educated answers. All right. So right now there are two types of SBA. There's more than two types of SBA loans, but there's two types of SBA loans that are getting a lot of attention. And I just want to be clear what we're focused on today. So the first is an economic injury disaster loan. This is not a forgivable loan. It's designed to compensate for economic losses up to $2 million, and it's funded and managed by the SBA directly. This is an opportunity that many of you can and probably should take a look at, but we're not talking about it today. If you want more information about those type of loans, we can certainly circle back to that at a future date. If you want to apply for that, you would do that directly with the SBA. The other type of loan that which is the one we're gonna talk about today, is the Paycheck Protection Program, which came through the CARES Act just a few weeks ago. That is a forgivable loan under certain conditions. It's designed to cover payroll and other expenses for about 2.5 months, and that loan is up to $10 million. We'll talk about the detail on that in a minute. It's a process designed by the SBA. However, you apply for it or you get the funding through your bank. So let's do an overview on the Paycheck Protection Program. And again, I'm going to cover this at a really high 10,000-foot level. I would imagine most of you on the call have this information, frankly, because this has been out for a couple of days. And if you're on the call, you've probably researched it, but I just want to level set. So the federal government appropriated $350 billion for the Paycheck Protection Program. It's believed that money will run out pretty quickly. It's for employers with up to 500 full and part-time employees. So it's geared towards small businesses, which I'm pretty confident is everybody on this call. And the amount of the loan is 2 months of payroll plus 25%, and capped at $10 million. So as you probably know, you take your average monthly payroll and multiply that times 2.5, and that's the amount of the loan. The most recent guidance I have seen is that the loan is at a 1% fixed rate for 2 years and no payments for 6 months. Some of those numbers have changed over the last couple of days, but I believe that's the current status on that. Does not require any guarantees or any collateral, and it can be used for payroll, rent and or mortgage interest, utilities, interest on pre-existing debt, and it is forgivable if it's used for those items. You have a reduction in forgiveness, or you lose some of the forgiveness if you reduce your head count or you decrease compensation. Also, you don't get forgiveness for any monies over $100,000. Anybody that's paid over $100,000, the portion that would be over the $100,000, and that is part of the calculation on the amount of the loan as well. So when you're applying, your best first bet is to contact the bank you have a relationship with. I know there's a lot of complications in that statement right there, but that's what I've been advised is your best first bet. We'll talk about with the panelists probably some other options here shortly. And have your information ready. So have your tax documents, have your 2019 financials, your P&L and balance sheet, have your payroll calculations, and the payroll calculations should be for all of 2019 and probably for the first few months of this year. And it should be separated out by employee, and it should be all inclusive. So include any expenses you've got for that employee. So medical, and so it's a fully burdened payroll calc. Your paid time off, the medical for the employee, and things like that. You'll need to know your employee head counts, and you'll want to have your lease or mortgage information and your utility costs, and also ownership information as far as who owns your company, because they're the ones that are going to have to sign that thing. So let's talk about forgiveness. Forgiveness is an amount equal to the costs you incur during the 8-week period after loan origination. 75% of the loan must be used for payroll costs, and then the other 25% can be used on interest on mortgages or rent and or utilities to continue to get the forgiveness. And like I said before, reasons the loan forgiveness would be reduced is reduction in the number of employees, reduction in wages paid to any single employee or any group of employees greater than 25%, and then not returning employees to work or restoring wages to levels on February 15th, 2020. So that was fast and furious because, like I said, I wanted to get to the Q&A as quickly as possible. So what we're going to do on the Q&A is I've got some questions that were already given to me. Is if you've got a question, don't be shy. Just throw your name into the group chat bar, and Michael, who's producing this behind the scenes for me, is going to call on you and unmute your line, and we're going to attempt it that way. Before we get to that, I'm going to go through some questions that I've been given here that got sent to us prior to the meeting this morning. But this is your opportunity to get your needs met. So yeah, be selfish, raise your hand, put your name in the chat, and we're going to go through as many questions as we can. Michael, can you let me know that we've got all the expert panelists unmuted at this point?
Affirmative.
We good?
We're good.
All right. Awesome. So I'm going to read some questions here for our panelists. The first one is, are we to employ people assuming we will be getting PPP monies, or are we to wait for the PPP money to come in before we hire employees back?
I'll jump in. You can hear me okay? Ryan?
John.
Michael? Everything, you can hear me?
I hear you just fine.
John, we hear you loud and clear.
Okay. All right. So the question was, should we bring them back before you receive your loan? I mean, that's kind of a question. There's no requirement that you do that. It's kind of a question of your cash flow, kind of your culture, what you're trying to do for your employees. But certainly when you do get your loan, you do want to bring them back to a similar position pay rate and everything when you do receive your loan, because that will be the start of your 8-week cover period.
Okay, excellent. Thank you, John. I'm going to move on to the next question. If we have furloughed and/or part-time employees collecting partial unemployment, are we supposed to bring them back at full wages, even if there's no actual work to do? Are we expected to pay them for sitting at home?
Yes, my understanding is you'll want to still bring them back to their full wages. This is perhaps an opportunity for you to be creative and use that workforce to look at other opportunities that maybe is in your industry that you can take advantage of. Maybe there's an inventory needs to be done, or maybe they're just going to sit at home. But at the end of the day, if you don't use up that loan money and you don't have your employees working the same hours, same wages during that covered period, some of that loan will not be forgiven and you'll need to pay that back. So it's kind of an interesting approach, and then you're going to pay someone to sit at home. I would recommend, again, that you try and find something for them to do that would bring value to your business, your customers, the community, as opposed to just having them sit at home.
Ryan, to follow up on what John just said, to that point, a business owner can be a little strategic on when they start the clock ticking on that 8 weeks. So the clock doesn't start ticking when it's approved. It starts ticking when the money is funded. And those 2 days can be different if it makes sense for those days to be different. And just a little strategy there for the business owner. But it does, it really benefits a business that is still using the majority of their employees the way that they normally do. But like John said, you might have to find some alternative actions or responsibilities if you're not able to be running at full staff.
Excellent. All right. Thank you, Graham.
And certainly during that time, you still want to maintain all that social distancing and protect the health of your employees. I mean, we have a lot of staff working remotely. So you're just going to have to kind of be creative about how to best leverage your workforce to capitalize on the use of those funds.
Excellent. If an employee is not considered at risk due to pre-existing illness but chooses to stay home out of fear of getting the virus, do we have to force them to come back to work and pay them their full wages? So maybe a little overlap.
That's
I'll
a
let
good
the
question.
HR guy handle that one.
Well, I think certainly you can't force them, right? I mean, they're going to have a choice on coming back, but if you are extending the opportunity for them to come back, then they wouldn't be eligible for unemployment. They wouldn't be eligible for any of the emergency leave coverage unless it's qualified. So I think that's one of those kind of case-by-case situations you're going to have to try and walk through. You might want to dig a little deeper as far as what are their concerns about coming back to work and what can you do to help mitigate those concerns. I know in our office, we kind of have a little bit of a bullpen area for some of our staff. And now that some of the remote workforce is at their home, we're actually moving them out of the bullpen area into the individual offices that aren't being used as a way of creating more of a social distance. So, in those individual cases, you might want to dig a little deeper to figure out why they're hesitant to come back to work. But again, you can't force them, but then again, they wouldn't be eligible either.
All right. Thanks, guys. Let's see here. Are we required to hire back the same furloughed or laid off employee, or can we hire a new employee, so a different person for the same role, and still be within the guidelines of the PPP?
The PPP is looking at your total head count, so that's not a requirement to bring back the same people. But certainly if you leave someone on the sidelines and you're not bringing them back for the same position, you might have other legal issues to deal with, whether it be discrimination, whether it be wrongful termination. There's there's some other things that are come alongside that, but from the loan perspective, they're going to specifically be looking at number of employees, not specifically who that employee is.
Going back to the previous question, I just had a thought. If I'm a business owner and I take out a PPP loan and I recognize that 75% of the funds might not be able to go to payroll for any unique circumstance. I think that business owner would, if they want it, they can just hang on to that money, so if you got $100,000 PPP loan and $75,000 of it has to go to payroll, and let's say 5,000 of it wasn't able to get executed for payroll, well, just hang on to that 5,000 and turn right back around and pay the loan down, and then you'd get the rest of it forgiven. I think that might be a strategy on how to handle that.
Excellent. Next question. If the economy doesn't recover for months and our workload significantly diminishes, we will not need the same amount of employees. How will this affect the PPP money repayment when we were basing our application off of last year's numbers?
Well, I think even if whatever you get the loan for, based on whether it's last year's numbers or a combination of Q1's numbers, the way that I think we all understand it is that it's got to go to payroll, and if and a portion of it that doesn't go to payroll below the 75% threshold is just not forgiven. And I think the business owner just needs to manage to that threshold and be prepared to pay it back if they don't use it.
Yeah, and I guess another way to look at it is if you're not paying for the employee, you don't have that expense, right? So that's another.
Correct.
But
Yeah.
it's not a $1-for-$1. It's not a $1-for-$1. So there's a calculation that they use for that cover period, and they I don't have the formula in front of me, but it's just not. So if you don't pay someone $1,000, doesn't necessarily equate that you're going to have $1,000 not forgiven. There's a ratio there that says, it's almost like a little bit of a ding that if you don't bring these employees back and pay them their same wages, the less of that's going to be forgiven. So it's not a dollar for dollar type of approach.
Okay. Perfect. Next question. Are there any banks that accept applications from businesses that don't have checking accounts with them?
So I can kind of speak to that a little bit. There's a regulation that the bank has to follow that's called Know Your Customer. And you can know your customer with a previous relationship that is not necessarily a checking account. But if it is a new customer that has no relationship with that bank, then there are other ways that a bank can meet the guidelines of Know Your Customer, and I think that would be bank specific on how they qualify that customer to make sure that. And the reason for that is you got $350 billion that's getting distributed, and there's got to be some guidelines in place to make sure that that's not that it's going to a legitimate business that meets the qualifications. And I think an individual bank would make their own decisions on meeting that guideline if they don't have a checking account.
Okay. Excellent. Give me just a second. I need to get AJ unmuted, and I want him to have a chance on that question also. Michael, I just gave you some info to unmute AJ. Can you do that in like 2 seconds, or is it going to take a little bit longer?
We need more methods of communication. Yes, Mr. Mullins. Pardon my sarcasm. I'm looking.
All right, we're gonna circle back to that because I'd like to hear AJ's answer on that. Also, in addition to Graham, the next question is, how is forgiveness actually calculated? What time period are we looking at in terms of full-time employee headcount?
So I could probably help with that. So the time period is, as Graham mentioned, it's the time you receive the loan, time you receive the funding, not necessarily the time that the loan was approved. And that will then last for 8 weeks from that date forward. There are 2 different options for businesses to look at to identify their number of employees. And one option is from February 15th of 2019 to June 30th of 2019. Or the other option is January 1st, 2020 to February 29th, 2020. So when you look back on those 2 periods, you'll want to identify what your average number of employees were, and then look at what you're going to do during the covered period. And you would certainly want either one of those look back periods to be less than your 8-week period. If your 8-week period is less than either one of those 2 options, you're going to have less of a chance of being forgiven. So you want to make sure that you identify one of those 2, and you're either at that number or above during that 8-week covered period.
Okay. Excellent.
Hey, Ryan, it's AJ. Can you hear me now?
Yeah, there we go. How you doing, AJ?
Good.
Excellent. AJ, I'm going to circle back to the previous question. The question was around banks accepting applications from businesses that don't have checking accounts from them. What other insight can you provide us in addition to what Graham already shared?
Yeah, I think he actually did a really good job. So the answer is there's no specific rule. It's just up to each bank, and each bank is going to have to make sure that they don't violate the federal laws or know your customer, and it's pretty onerous in some cases. So for example, like some of our business entities, one entity is then owned by a series of other LLCs, which are then owned by individuals, and you have to keep following that paper trail back and back and back. So these are just all normal requirements of any customer of any bank when they open a new account or apply for a new loan. So to go and vet all of that for non-customers is fairly significant, whether it's because of the PPP loan program or any other just regular deposit product. So in a lot of cases, the bank is saying, hey, this money could run out quickly, and we want to get it out to our customers as fast as possible before it runs out. So we're going to choose to just work with our customers because it's just going to take us too much time and we can't get to everybody. So I know banks that are making that decision for those reasons, which is very consistent with what Graham said. But again, it's really up to each individual bank. I know on our side, we have made some very limited exclusions. So we didn't make a blanket rule, but we basically said we want to get to as many of our current customers as possible. We just feel like that's relationship banking. But then we have been accepting some PPP loan applications from non-customers, and we just have to go through that normal CIP, know your customer kind of stuff that we'd always do. We just have to do it in a compressed time frame. So the other thing, I want to go back to the previous question and the most recent one, because it's coming down to some of the details of how do you calculate the amount you're eligible for in a loan, and then how do you, what are the things that a business must do in order to qualify that for maximum forgiveness. So the approach that we've taken at Mission Bank is we've created kind of a much simpler formula, and we like that because it really protects us and the borrower, because we're limiting the amount of that loan. So we're not maxing people out based on the 2.5 times payroll, which is the SBA guideline. Our number is going to be probably somewhere between 15 to 20% less than that. But what that's doing, it's creating a cushion so that we don't put our borrower in a situation where they get a surprise and they have to pay that money back. We're really trying to coach our borrowers into a more conservative approach to where they're confident and we're confident that they're going to qualify for the 100% forgiveness. So that's just something we're doing. Every bank is different and every borrower is different, but even if your bank would qualify you for the 2.5 times, you may choose to take a more conservative route so that you don't get a surprise and have to come up with that cash quickly.
Okay, interesting. Good to know. Good to know. So AJ, you guys are taking a more conservative approach to the amount of the actual loan request so that once this thing goes down the road, your customers don't end up with a cash flow issue in a couple of months because they've got loan that they got to pay back that maybe they don't have the cash for at that point. Cool.
Right. Because I think the design for this is very specific. Get the money to the businesses as soon as possible so they don't have to lay people off.
Yep.
Right. That's what we're all talking about. So if you're in a position where your business is still operating fairly normally, that's awesome because now you're still generating revenue, but you have this cushion. But if your business is in a situation where your revenue is declining, in some cases significant, or what's going to happen after this first 2-month period, now you don't want to be in that situation where your revenues decline. This is kind of a prolonged economic downturn. And then the government says, oh, by the way, we want our money within the next 18 months. Because that's going to be a large monthly payment. When you advertise this loan over a very short amount of time, you got to come up with those payments. And if you start defaulting on those payments, the bank's not at risk because they're 100% guaranteed, but that's still going to be a defaulted loan for that borrower, which is generally not going to be good for you going forward in your future borrowings.
Excellent. Thank you, AJ.
That would, to follow up on that final point that AJ just made, since we make a lot of SBA loans too, and I think that's a good source of capital. That program, the normal 7A, SBA 7A program is a good source of capital for HVAC contracting businesses is if a default on a PPP deal will likely follow them to a future SBA 7A application in the future. So.
Yeah, you don't want that following you around, right? Yeah, for sure. All right,
Hey,
I've got
Ryan, I was just going to say, since we're talking about kind of cash flow, maybe the bankers could give some suggestions on what a small business should do. I've heard that you should probably set up a different account or certainly a different sub account in your general ledger and track that money specifically so that it doesn't all of a sudden get wrapped up into your operations and other expenses that might not be approved. And so it might be wise for businesses to make sure that they really tightly control once that money gets in their doors and how they're going to use it, because they're going to be held accountable for that after that 8-week period.
Yeah, I mean, I've heard that too, and we've been debating it. I think every business owner has their own internal record keeping system, and if they think a segregated account, makes sense, I wouldn't tell them not to do it. But there's another side to that, which is you still have to make payroll and do all of your normal expenses, and that's where you're going to track it. So the money coming in is going to go into this segregated account, but then what account is it going to go out of? And that's more critical to track. And generally you have ACH payments, you have check numbers and check stock that you can't just all of a sudden necessarily convert, or it may not even be beneficial to convert all of your payroll and your AP process into this new account. So I think that there's kind of a double-edged sword there. So I don't necessarily personally think it's as beneficial, but it is critical that you're tracking the outgoing payments. So you definitely want to be prepared to say at the end of this 2-week period or 2-month period, I have really good visibility into all my payroll records. I can quickly print out from my payroll provider or however else I choose to do that exactly what I paid. I can quickly understand the payments that I've made on mortgage, interest, rent, or utilities. So with whatever in your system allows you to track those outgoing payments and kind of paying attention to them as they go so you don't get to the end of the 2-month period and have to go back as much, I would definitely recommend that. But I don't necessarily think it is requires a new separate account.
Excellent. Excellent. Thanks, guys. I've got one more question on my pre-question sheet, and then I'm going to ask Michael. He's actually got a whole list of great questions in the chat that he's going to read back here in just a minute. So, Michael, you want to get queued up with your first question here shortly. We were thinking about opening up the lines and letting people ask their questions directly verbally, but I think it's faster if we just roll through the chat from one central source. So my last question here on my sheet is this questioner is concerned with one of the qualifiers of the PPP loan. The qualifier's current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. And they're wondering, wouldn't existing business capital disqualify us for this program if we can still support our ongoing operations?
Well, I think
AJ, you go ahead, and then we'll cycle through everybody.
Okay, sorry. Yeah, I think that one of the main questions in the certification that the borrower is making is that they've been impacted by COVID. So I think the way it's written is it's very broad. And so I think if you were to say, I could survive without this loan, that's too conservative approach, because I think a lot of businesses could survive, but this will definitely give them some liquidity, some cushion to make sure they can survive, or some contingencies, because part of it is we're only in week 3 of this thing. This thing's going to last, you know, the stay-at-home stuff is going to last for several more weeks, and then we don't even know what's going to happen to the economy after that. So I think that would be too conservative of a way of looking at it. But you definitely have to be able to say, I was impacted. So if your business is, you know, I don't know which businesses out there may say we're actually benefiting from this in some way. Maybe if you manufacture these masks and other surgical or medical supplies that are in, you know, very high demand. I think if your business is actually growing and thriving, then I would say that probably disqualifies you. But for us, it's like almost 100% of our businesses are impacted in some way that's, you know, dramatic enough that they qualify, even though they couldn't say definitively, I would only be able to survive if I got this loan. I don't know if that even answered the question, though, because anyways, go ahead.
I think it probably did. Graham, anything you want to add to that?
Yeah, AJ, I thought you answered it really well. And I would just kind of make one more statement to say, yes, I agree that statement is broad. And I think the spirit of this program is to take that broadness to help you out, not to take that broadness to be conservative. I think as long as you are, you know, acting within the spirit of the program, most businesses could use the help.
Yeah, and I think to further support like the intent of it and really the economic impact for us, every bank is going to be limited on how many loans they can do. I think you guys maybe saw Wells Fargo is already tapped out. So Tuesday they put out a deal that said, don't ask us, we're already at our maximum. Every bank is regulated by certain growth ratios, so it's not unlimited on our side. And so for Mission Bank, it's about $100 million. So if we can go get $100 million for our local communities, that's $100 million of spending power that didn't exist last week. So I think it's really, like Graham said, the intent and the spirit is to get this money into our communities as fast as possible, and then hopefully spend it. And you know, each business owner has to, you know, spend it wisely. But I think that is the intent of the program, and supports that more liberal interpretation of who would qualify for it.
Excellent. Excellent. Thank you, gentlemen. Michael, go ahead and ask one of the questions, or the first question from the chat bar.
A couple of questions from Lisa Rosenall. First question. I heard as of this morning, the money was already gone. Any truth to that rumor?
No. I think the last I saw was they had, there's been, so inside the SBA system you get a local bank approval, or not a local, just any bank approval that is part of the approved SBA system. And then that bank takes their approval and runs it through the SBA E-Tran system. And I think the last I saw sometime yesterday afternoon is roughly about 60 billion of the 350 billion had gotten a E-Tran authorization. So that kind of takes us back to a question earlier about when the 8 weeks starts, is that the E-Tran system, it kind of earmarks that business's loan within that $350 billion. So I don't know what it is today, but as of yesterday afternoon, I heard it was about 60 billion.
Thank you.
I don't know if AJ has something different.
No, I mean, I don't think I know it's not run out because we're still receiving those PLP numbers as we speak. I mean, I've gotten a couple emails just during this call that say we're still being granted those numbers. I think that 60 billion is probably in the neighborhood of accurate. So I would, who knows? I mean, there's a lot of rumors going on. That's what's making this process a little bit difficult for all of us. But I think it's safe to say the money has not run out yet.
I think it's also helpful to add that the president just, I think the other day, maybe it was over the weekend, is committed to adding more up to 250 or $225 billion to that, and will ask Congress if this is current cap is going to be run out quickly. So he understands that small businesses need this, and sounds like they're willing to go back to Congress for more. So certainly get it in as quickly as you can, but I think there's intent to try and make sure there's enough money out there.
Excellent. All right, next question, Michael.
Also from Lisa, I was told that banks are not looking at applications that the monthly payroll was under $200,000 a month, and that banks are prioritizing loans for their larger customers. How would you respond?
Well, I mean, I think every bank has to speak for themselves, and there's definitely not a general answer for that question. And AJ mentioned it earlier, and Live Oak Bank is doing the same thing as we're working around the clock to service our existing customers first. And then once our existing portfolio is satisfied, then at that point, Live Oak is going to look to offer this to new customers. But I don't think me or AJ could speak for another bank.
AJ?
Yeah, I agree with that. I mean, every bank's going to choose their own program. I mean, it is limited, so I can tell you that no bank is it unlimited. I mean, you know, we've been told that we could eventually sell these loans. You know, rumors are out there that the Federal Reserve Bank would end up buying these. So there's some things that could free up more availability. But for us personally, I can tell you we're doing a lot of loans. I mean, I'd say a lot, but we have a number of loans in all sizes: $7,000 loans, $13,000 loans, $57,000 loans. We have a few big ones. We got a couple. You know, we have several in the $600,000-$700,000. We've got a couple in the multiple millions. So our goal is to help as many businesses as possible. And personally, I can't tell you that $27,000 loan isn't more vital to that business owner than the one that got the $2 million loan. I mean, you add zeros, but I can't tell you it's any more impactful or important to give the person the $27,000 loan. So we're trying to help as many of our customers as possible in as quick a time frame as possible, and I would say especially the smaller ones.
Yeah, I actually just refreshed our dashboard. The lowest loan we've made is $4,700. And we've made one pretty close to the max. So everywhere in between.
Excellent.
Thank you. Next question is from Val. He hires employees in high demand during the summertime because it's a seasonal business. Am I able to qualify for the loan since I don't have employees for about 5 months out of the year?
I think that a business that has seasonality is recognized in the PPP program. And if you have historical data from that prior year's season, you can make the request for that seasonality. But I'd be interested in John or AJ cleaning me up there.
Well, I think within the final ruling, they are looking at some aspect for seasonal employers, and you could look at a 12-week period beginning February 15th of 2019 or March 1st, 2019, ending June 30th, 2019. So, and I don't know if that fits within your season, but that's the guidance that they have so far for seasonal employers. But I think with what Graham, I think you'll need to work with your banker to figure out how that would apply and what best approach to take to get the max amount of your loan that you can get.
Yeah, I agree. They have special provisions for seasonal workers in terms of the amount you qualify for. And then, so you go back, you follow the rules on that, which are a little trickier. And then you also want to separately do the calculation for how much is forgiven, because I think they're two independent questions with different calculations. And the amount of forgiveness is more about how much you actually spend over this 8-week period from the time the loan funds.
The bottom line is that there is a provision for companies with seasonal workers, and I think there's a little bit of a devil in the details. It's just a different calculation on both sides of that equation, both the loan amount and the forgiveness, and work with your bank. Make sure your bank, when you're applying, knows that you're a seasonal company and can walk you through the formulation on that.
Yeah,
I do. In that scenario, though, going back to something AJ said, I do think that there's some soundness or some prudence related to maybe erring on the lower side, where AJ mentioned that Mission is taking that mindset, and I think that's some pretty good advice.
All right, we've got a number of questions about PPP funding. Robert wants to know, has anyone received the funds for the PPP? And there are some other questions asking, how long do you expect it to take to receive funds after the application is processed?
so I can tell you that our internal process is that we have to approve it by Mission Bank, and then, as we've been alluding to, you have to enter it into the SBA website and receive a PLP number. Once you receive that, that's kind of your golden ticket from Willy Wonka. So you're going to get that money, and then it's up to each bank on how, what is their time frame to, you still have to produce loan documents, the borrower has to execute them, you have to get them back to the bank and board and fund that loan. So every bank is going to have their own time frame. There is guidance from the SBA that says these loans need to be funded within 5 business days of receiving that PLP number. So that's our goal. So we had loans approved last Friday. Actually, it was like after midnight in the East Coast. So we were getting loans approved last Thursday night on the West Coast. So we're prepared to fund those by this Friday.
Nice.
Yeah, that's good news.
Great.
Lauren wants to clarify, can we use the PPP money for medical insurance costs and rent as well?
Yes.
I believe medical benefits are included in that payroll calculation, if it's a prior historical benefit.
Yeah, if it was an expense before February 15th, it's something that you can include in your forgiveness. But, as far as the rent, and I think it was mentioned earlier, is that you have to be very careful that the ratio of your loan, 75% of that has to be tied to employee wages and a payroll cost. So you want to make sure you keep an eye on that ratio. Otherwise, they're not going to forgive as much of your loan if you have more than 25% of your usage tied to rent or tied to interest or utilities.
Thank you. Milton wants to know, what is the difference between the economic injury disaster loan and the PPP loan?
AJ, do you want to answer that first?
Sure. So first of all, there are two different programs where the disaster loan, you apply directly to the SBA on their website, and you get the money directly from the SBA. So there's no need to involve a bank, and the bank is really not helpful. Okay, so that's the first thing you'd want to know. The second thing is that the opposite is true with the PPP loan, is that you have to go to a bank or a financial institution that is designated by the SBA to receive these. So that's the first thing you want to think about. If you previously have applied and received the disaster loan, you're still eligible for the PPP loan, and you just have to pay off the other loan, as I understand it. So if you already received some money through the other one, you just include that in what you're going to use these funds for. As far as what qualifies for the disaster loan and why would you choose that one versus this one, I don't know, because I'm not terribly familiar with the program requirements of the disaster loan directly through the SBA.
I can speak to a few of the high points on the disaster loan. Let's see here, uses, payroll, fixed debts, accounts payable. So that gives you a little flexibility in this industry. Other expenses that can't be paid because of the disaster's impact. So the uses are much broader. It's up to $2 million. It has a 3.75% fixed rate, and it can be up to 30-year amortization, but none of it is forgiven.
Great. I've got a question from Jose. Do sole proprietors qualify for the PPP?
They do, and I believe 1099 or sole props. Oh yeah. Mm-hmm.
Yes.
Okay.
The next question, I think we've spoken to this, but you might highlight it again. If we miss the 8-week headcount and benchmark, do we forfeit the entire forgiveness, or is it a percentage?
It's proportionate.
Yeah.
Let's see.
Maybe a clarification on the sole prop question. Are sole proprietors with no employees at the moment eligible for PPP? So it's
Yes. It'd be like you have one employee, and then that would be capped at the $100,000 max.
Okay. Let's see. Next question. I'm muted. For employees who are asked to not come in and have medical, dental, vision, will PPP cover the employees' portion of it, even if we do not bring them back to work?
I wouldn't anticipate that you would be able to expense the employee portion of their medical insurance. This is all geared towards the employer with the theory that they're getting paid, and when they get paid, therefore they can cover the cost of their medical insurance.
excellent. Well, I'm going to do a time check because we've got about just over 5 minutes left. How are we doing on the questions on the chat bar there, Michael?
I think we've covered most of them. There's a few overlaps, and some were answered after the question was answered. After the question was posted, I believe. If there's additional questions, or if I missed your question, shout at me in the chat box or raise your hand, please.
Okay. And if for some reason we didn't get to your question or we lumped it together and didn't do that appropriately, I'm going to share some contact information here shortly. My guidance is going to be to probably email me your questions, and then I will direct them. I'll either answer them or I'll direct them to one of these three gentlemen or several of these three gentlemen as appropriate. I'll kind of act as an air traffic control on that. So let's go ahead and take it to a close. So just a quick note on one of the other things we're doing to help make it easier for you all to do business is we've built a resource page, a resource web page with all kinds of information that can help you right now during the shelter in place, during all the COVID crisis. Lots of information about the PPP and the CARES Act is on there. Michael, why don't you throw up the closing poll while I'm doing kind of my closing notes. That way people can start answering it, because if you're like me, you probably are about to hang up. So take a look at this website. It's this short URL right here. We've got a lot of information about the FFCRA, which is the Paid Sick Leave Act that went through a couple weeks ago, CARES Act, safety for your employees, how to communicate with your customers during this time, and how to continue marketing to your customers, even though we're sheltering in place. There's a letter on there that your employees, that you can modify, and your employees can carry that to identify themselves as an essential business. And all right, I've just been advised we got a couple more questions. All right, go quick, Michael.
Go, go, go. William wants to know, do we need to keep employees on the payroll after the 8 weeks is up?
No. It's AJ. I don't think you do. I think they're measuring the payments during this 8-week period, and then you get the loan forgiven, and then you're back to operating under whatever conditions you choose.
That makes sense. Let me see. Can I start the PPP after my employees come off of unemployment?
I think that goes back to AJ's comment earlier about closing the loan within 5 days of the SBA approval. And you just would want to be strategic about that.
I have a quick question, maybe Graham or AJ. So that you mentioned the PLP number. How do we know if that's our golden ticket? How do we know if the bank receives that? As someone that's trying to borrow money, how would they know to get that or find out about that?
I think every bank will communicate their own way to the customer. When we get SBA approval, our servicing group fires off an automated email that says, hey, congratulations, you've been approved and we have gotten the SBA authorization. Let us know about closing.
We're mailing it to them with a candy bar.
Man, gosh, AJ's got us.
Your golden ticket. Love it. Love it.
Yeah, so we're doing the same thing. We're just forwarding the information that's directly from the SBA.
And how quickly after the bank submits do they normally get that number?
Within a few seconds.
Yeah, I think that program can handle like thousands a minute, something like that.
Yeah, I mean, we've had issues with the system throughout this whole process. So at various times it's kind of down, it's wonky, it times out, but generally speaking, we hit submit and we get the email within less than a minute.
Excellent. Any other questions on there, Michael?
That's it.
Okay, so here's the contact information for myself and then everybody that was on the expert panel today. Big thank you to John from Single Point, AJ from Mission Bank, and Graham from Live Oak Bank. So feel free to reach out to us. My guidance, my request would be if you've got further questions, send them to me, and then I'll act as an air traffic controller to get those questions to the right people to get you the answers. And it's, I'll just act as the air traffic controller on those questions for you. So feel free to email me. My email address is there. It's ryank@johnstonesupply.com. I appreciate everybody's time. I hope we got to your questions. I hope we answered them. And if you haven't done it yet, rate this meeting value for time. So the hour you spent together, how valuable was the time spent on a scale of 1 to 10, with 10 being the best?
I missed one question. Maybe we can squeeze it in really quick. David wants to know, if my bank is no longer accepting applications, what do I do? Suggestions.
So the on the SBA website, you can they've got a pretty accessible link that shows every SBA approved bank in the country. And I would start there, and you could stay locally, or you could find maybe some of the larger, more active SBA lenders.
I think we got them all. Thank you very much, everybody.
Excellent. Thank you, everybody. Be sure to fill in
Thank
that
you.
poll. It's how we judge if we're bringing value to you. Helps us recalibrate and get feedback. Have a great day. And we'll be back with probably more content for you soon.
Thank you.